But in terms of petrol, folks still use petrol to get a few things done. Folks want to put some petrol in the generator and things like that. That seemed to be the case for almost everyone. But all this put together, whichever, prices are likely to go up. What's your short to near-term outlook on this?
Well, so far we expect petrol prices to remain as it is, although there were news that the federal government is looking to crash, bring down petrol prices. We're not very sure how possible this is. I mean, in the sense that, we're not very sure how possible this is, but this is an ongoing story. But so far we expect petrol prices to trade at current levels. We expect diesel prices to remain volatile. We are getting into the fourth quarter of the year, and we're going to see higher, activities at the Christmas festivities coming up. There's going to be transferring logistics. There's going to be increased logistics. So we expect to see diesel prices trading at current levels, which will, we don't really see this having any significant impact on most consumer prices. Consumer prices will continue to trade at current levels.
I'll go to the current levels. Folks are going to be scared. But as far as, let's add very quickly electricity into the conversation, because when, it's going to be a little bit of a double whammy. When petrol prices, when we don't have enough petrol to buy, and of course, so generators are running, diesels are not running as much, then we hope that the discourse will, will provide some measure of stable electricity. But right now, it doesn't look like we have anything seriously happy-fying from the electricity space. Partial collapse, Lagos, Osogbo, Kanji, Jeba, and Shiroro, 2,058.6 megawatts.
Yes, so that was last week Thursday. So there was a partial collapse in the grid. So that's why power generated was as below 3,000.
No, last week was really nasty.
Yes, exactly. So now we are seeing an increase, and most of those grids are back up, and we are seeing most power generation stable above 3,000 megawatts. I mean, that's not enough for us anyway. We still need to produce. I mean, our target is about 6,000 megawatts, but we are not up to our target yet. But so far we're much better than we were.
But hold us to let's go to the market prices. I love things when I see neutral prices here. It looks like yes, we're there, but in terms of retail prices, in terms of the market survey, you folks did some survey this week?
Yes, we did. And most prices.
What are your findings?
Well, most prices, some are flat and some they are marginal gains. So, for example, if you look at the list, the food basket that we report, we see that palm oil prices have actually come down. It's marginally lower compared to what it was last week. Semolina and the rest are somewhat flat. Rice, we still have a range between 15,000 naira to about 16,000 naira. Price of yam and the tomatoes, most of them are still relatively flat. But then, like we said, this is the beginning of the harvest season. The first half of Q4 will be the main harvest season, and then Q4 will be a very critical quarter in the sense that harvest season is commencing in the first half, and then Christmas, the festivities begin in the second half. So there's going to be increased buy-in. So we may see some volatility in prices as we proceed into the Christmas months.
Is there any likelihood there's going to be another survey this week where you think perhaps we're getting towards the end of September, really?
Yes, we are getting towards the end of September, and so far, I mean, what we're seeing now is just marginal downward trend in prices, or at most flat. But then most imported goods, which are which have some sort of import content in them, or they are somewhat flat or downwards because there's now more availability of forex to trade. So far, inventory levels are stocking up as most traders are trying to get gear for the festivities. So all in all, we expect this upcoming festivity to be to be brighter than last year or previous.
That's what all of you keep saying.
But that's the truth. I mean, we have Q3 GDP figures will come out as well, which we expect improvements. We expect if not inflation to decline marginally, or at most flat, and we expect forex stability. It continues. It keeps getting better. So we expect to see a more prosperous Christmas.
A more prosperous, happy holiday, isn't it?
Yes.
All of you keep giving these assurances. I hope it comes true, because if anything has happened, some folks are going to hold me responsible.
I mean, look at it compared to last year. Look at most of the food baskets that we track. So we've seen significant decrease in prices. Last year, December, or towards this period, a bag of rice is about 25,000 naira.
If prices are low, Nigeria wants money here.
Yes, well...
They want more money here because they've got to be able to afford it.
Yes.
So, two things have to happen. Prices will have to come down. More cash has to come into the pocket. I'm sure that's just what the bottom line really is. But we're still a few weeks away from the end of the year, isn't it?
Yes, exactly.
Things could happen.
Better things could happen. It could get much better or it could get worse. But that's not what we're hoping for.
It's a Tuesday. I wish I had you here yesterday to start the week, but it's never too late. Thanks for that optimism.
Thank you.
Konobi from Financial Derivatives Company, an economist and one of the research analysts. Back to the big story. The Ministry of Finance has approved the decisions of the Securities and Exchange Commissioner Administrative Proceedings Committee to ban the directors of partnership investments and partnership securities. The managing director, Mr. Victor Ogenwoyi, is getting a life ban. That is now confirmed. The chairman of the company, Mr. Alan Omorabon, is getting a 5-year ban, as well as 5 other directors of the companies for matters relating to securities fraud in the market, illegal sale of shares belonging to one particular investor. And they'll have to buy back these shares between 1997 and 2017. Quite a long way to go. Let's come back to you after the break.